Welcome back, traders. It's John. It is March 1st, 2024, and I'm recording this video at 6 p.m. Eastern Time on Friday. So it was a really interesting week, finishing on a high note. So again, the disclaimer, I'm an individual growth stock investor, not affiliated with IBD or MarketSmith. So here's our agenda. We'll get into the indices, a little bit on the internals. There's been some changes. And then I want to go into a segment called Bubbly, or is it early? And then we're going to examine a little bit of some of the big leaders, and then we're going to wrap it up. So let's get into the indices. So here's the NASDAQ composite on a daily chart. About 3 weeks ago, I was noting that the new highs in the NASDAQ had kind of stalled out a bit at the mid to late December. We were in the 480 to 400 range. And then in January, things got tough. We really kind of stalled out, and the new highs were not there, even though the index was making new highs. And that was a cautionary sign. And we've been watching it closely. Well, today, things started to clear up. The index hit a record high. This black line is the record old high for the NASDAQ. So we hit a new high, and we had 403 new highs. So you can see here, that is a marked improvement in what we were seeing the past 6-7 weeks. I mentioned only 1 week ago that got a little dicey with the new lows picking up sharply off the top. That was a concern, but we're flexible here. So 1 week later, the picture has changed. We started to see the new highs pick up and new lows shrinking. So that's a really encouraging sign. Now, another thing of note is the small caps. So this is the IWM small cap ETF going all the way back into the summer to August when we started correcting. So you can see this is a classic coiling base pattern, kind of wide and loose, big broad ranges. Tried to get up near the old highs, pulled back all the way down to the 50, pulled back for another wave, smaller correction, then a really small correction. And then we tried to get going on Thursday, and we stalled just below the December highs. But today we closed above the December highs that I've marked on the chart. So this is a classic kind of wringing the water out of a towel. And then hopefully it clears the path for the small caps to really start launching and helping us with the next leg of the bull market. Now, I also called up the small cap ETF IWO, which is a little bit more focused on growth stocks. The growth names you can see here, similar coiling, but you'll notice that the IWO broke out a couple of days ago. So the growth component is a little bit ahead of the IWM, which is more dominated by financials and some of the regional banks, which have been struggling as of late. So this is a good sign to see these two charts looking like they want to really break out. So following up with the IWO, if we took the IWO and we divide it by the SPY, which is the S&P 500, you get this line chart. When the line's heading down, it means IWO growth is underperforming the S&P. You've noticed since November, we're starting to see an uptrend just starting to emerge where the IWO is starting to outperform the S&P. That's a good sign for risk on. It's a good sign for growth investors. So let's get into this segment I call Bubbly, or is it early? So we probably all know the hot sectors of the market. There's no doubt that crypto has really taken off. It's probably one of the top performing sectors. Of course, NVIDIA, the king is still the king. NVIDIA has been performing and delivering earnings and sales. All the semiconductors, the SMH here is representing all the chips. They've had a great day the last 2 days. They were up quite a bit. XBI is the biotech index, which has really started to have a good move here the last 2 or 3 weeks. It's more of a risky sector, but if you're in the right names, they could have some real potential. Now, software, cybersecurity software represented by Hack has cooled off a little bit, and we're going to talk about this a little bit more to follow up on last week's discussion. XLF is the financials. The financials have not been rocking and rolling yet, but they are participating in a slow, methodical way. And we definitely need the financials to participate in the bull market. And here's the S&P. So let's look at this idea of, is the market in a bubble? You've heard a little bit about it, people saying things are getting really hot and frothy. Let's look at a real bubble. Here is the NASDAQ composite on a weekly chart from 1998 to 2000. And a couple things. One, I wanted you to recognize Alan Greenspan was the Federal Reserve Chairman back at that time. And in January of 99, Alan Greenspan warned Congress that the stock market appeared, quote, overvalued. And you can see the NASDAQ was trading at about 2,300. Later that year, by December 5th, you can see the market had been grinding its way higher. Alan Greenspan again warned of his famous irrational exuberance talk. So at that point, the market was around 3,300. And you can see here that from the initial remarks that he made, the market moved up over 100% in 61 weeks. With the last real blow-off phase, you can see the angle of ascent got very steep in here. We moved up 45% in only 13 weeks to the top. And you can see, look at these powerful weeks, week after week, closing at the peak continuously. That was the dot-com bubble that burst in March of 2000. So if we also look at a bubble period for Bitcoin, you know, from 2020 to 2021, Bitcoin was on fire. And it started in the summer of 2020, pretty much going till about early 2021. It was a 300% move in 17 weeks, pretty impressive. So now let's look a little bit of what we see today. So the S&P is on the left. Now, the S&P has gone through a bear market, and we've been coming out of basically a 2-year consolidation. And we've hit new highs right around the beginning of the year, and we're moving higher to new highs. It certainly doesn't seem like we're extended and in a bubble phase for the S&P. Now you can look at Bitcoin. Bitcoin in 2021 tumbled pretty badly, but what's really unusual is the recovery that we've seen in Bitcoin. In 2024, Bitcoin has been is up from this point, and I picked this point saying you're probably not buying off the bottom, but you know, you had an uptrend, you had a little bit of a basing structure. From this point, it's 217% in only 36 weeks. But if you look at it, it's really a big cup, and we're just getting to new highs. So we're not exactly extended in a bubble. Now, it's unusual that a sector or a market would recover so quickly after having a blow-off top like Bitcoin did. Now, I think we all know that the institutions have really taken favor to Bitcoin. There's adoption. They're starting to support it. They have ETFs. They all have ETFs now to allow retail investors, et cetera, to invest in the crypto markets. And the perception is that it's safer access into the crypto markets to people to add that component to their portfolio. So I think we're seeing a lot of money flow. Now let's go back a bit and talk about these major bull markets with multi-year catalysts. You know, if we go back to the internet in 1995 to 2000, there was a 5-year window of incredible innovation with the birth of the internet and everything that happened beyond. Now, in general, this was kind of the sequence of how things rolled out. The first few years were dominated by networking and the infrastructure of the internet. You know, Cisco dominated networking, Nortel Networks, Qualcomm, and fiber optics was really led by Lucent Technologies and JDS Uniphase. PCs were proliferating, chips were getting faster. Intel was actually the chip king at the time with processors, and Gateway and Dell and Compaq were dominating PCs. And then this thing called the web browser in 1995 allowed people to actually go onto the internet and surf around and look at sites. Netscape and Spyglass were innovative new companies. Now, to connect all this, there was something called dial-up modems. And a company called US Robotics dominated the modem business, which allowed companies like AOL and Yahoo to get people connected to the internet. And then it goes on and on. Eventually, there's software that gets applied and developed for corporations Oracle started to take a dominant position, PeopleSoft, Siebel Systems, and then connecting to the internet with connective devices such as the phone. And Nokia was the king of the phone in the 90s. Then BlackBerry came along, and then e-commerce. We can go on and on, Amazon, eBay, et cetera. And then certainly after 2000, all kinds of retail apps from Apple, Netflix, Google, Shopify, et cetera, et cetera. So it's a long process, and it starts with networking and infrastructure to lay the railroad tracks for all of that to happen. So where are we? Artificial intelligence. It probably came into prominence more in 2023 than ever before, the promise of it. And we're seeing Bitcoin really, really start to hit to the masses. Well, we've got infrastructure and chips dominating AI, NVIDIA, AMD, and Supermicro, and others. And then all of these artificial intelligence server farms have incredible power and cooling needs. And we're seeing companies like Vertiv and Hubble and Supermicro and even Ecolab making particularly specialized cooling systems for all of the support that's needed for artificial intelligence chips. Of course, we're seeing the beginnings of software tools to be developed to people to really leverage AI, GitLab and JFrog and Pega, and the database companies that are going to make sense and let people query all of this data and with a sophisticated software, Elastic and MongoDB, Snowflake. Cybersecurity is critical with artificial intelligence in order to have all these environments work in a secure way. And we know a lot of the companies that are participating there. And there's already the beginnings of companies that are using software, Uber and Samsara, et cetera. We haven't even gotten to the retail software apps in mass yet. So, we're probably, we're just in this early phase of artificial intelligence. Basically, the railroad tracks are being laid with the infrastructure and the chips and the power cooling to allow, high-speed data exchange. A lot of this build-out is going to happen over the next 5-10 years. So I've included a couple slides with some data. Now, this data comes from ARK Invest. And I've put down here, they put out a yearly report called Big Ideas. And this is from the Big Ideas 2024 report, which came out about a month ago. And if you go to ARK Invest, you can grab it because it's a good, 70, 80 pages. So this is just one slide of some of the research they did on artificial intelligence. Basically, you can pause your video player and read the slide. But essentially, it's saying artificial intelligence is going to automate tasks to allow for productivity gains. Workers and knowledge-based professions are going to see incredible productivity gains. So this is a powerful slide that there's a lot of growth in software coming in the future. Now, they also have a whole section in the report on Bitcoin. Now, I personally have not been a participant in Bitcoin. I didn't really understand it, and I have not really invested in it. But it's now becoming more mainstream. And in this report, they really talk about in this third block how institutions have finally kind of accepted, and they're bringing ETFs to represent Bitcoin into their portfolios and offer them to retail investors. So you can read this slide about some of the drivers that ARK Invest sees for Bitcoin in 2024. And here's another slide relative to Bitcoin, really about the exchanges and liquidity. The three main exchanges were, FTX for a while until they disappeared at the end of 2022, Binance, and then CME, which is the Chicago Mercantile Exchange. And you can see here, 2022 was dominated by Binance and FTX. And you see purple is the CME. Well, with FTX essentially going bankrupt, you can see that for the first time in December of 2023, CME's open interest has surpassed Binance for the first time. Again, another piece of evidence that this is really becoming mainstream, and the liquidity is picking up tremendously in Bitcoin and other coins. So just a little bit about the bigger picture with Bitcoin. So let's look at some of the big leaders and what's happening. So I'm starting off with, I guess I'll call it the king, NVIDIA. Now, I wanted to point out, I pointed this out back in the summer when NVIDIA peaked out. I said it was likely they were going to peak out for a short-term basis at the 500 psychological level. And I've done GMU extra videos on psychological numbers, so you might want to go back to my YouTube page and search for those. But NVIDIA came into 500 and it basically doodled around. And it doodled between 500 as a psychological number and the 1 trillion valuation, which was somewhere in the 410 range. And you can see that it couldn't get through 500 for this is about a 6-month period. And you can see, but every time it kind of bounced around to build the base, it got support at the 1 trillion psychological level. Now, we all know it broke out, had an incredible push higher, and it had a great earnings report last week. NVIDIA, the 2 trillion level, which I've drawn in green here, is right around in this 820 range. And so far, that's been an area that, it's possible that NVIDIA might dance around a little bit in. Or the 1,000 psychological price level is above. Maybe NVIDIA goes through the 2 trillion level, gets to 1,000, and starts to consolidate between the two levels, just like it did 6 months ago. That's possible. It's had a 65% move right into the 2 trillion level. Supermicro, incredibly explosive move, 200% right into the 1,000 psychological price level. Really looked like a climax top. And this stock probably needs time. Needs time to base out. Probably will do that somewhere under the 1,000 level. But again, psychological price levels in the market have worked over time. And if you study charts and even model book stocks, you'll see that these levels have some meaning. So I've also put in Meta here, which has also had a strong move. It's up over 50%. And you'll notice that it had a lot of really good velocity. And it's right now right into the 500 psychological level. So it's possible that even something like Meta will dance around a little bit, maybe push to consolidate its gains and form a base. And then to the right, this is advanced micro devices. And when you look at this, it had an incredibly powerful move, 96% in 11 weeks. And you can see the volume was towering, extreme institutional demand. And it's been really moving tightly. It only has a 12% flag. You could consider this a high tight flag, or you could consider it a flat base at 12% deep. So it's broken out of that in the last 2 days. As I mentioned, the chips are really on fire again with the NVIDIA report. Really strong action from AMD. All 4 of these stocks have been acting really well. I will let everybody know I own a position in AMD. Now, the point of showing you the slide is it is possible that we could slow down a little bit. As I mentioned, we could get a pause, we could consolidate some gains before we move higher. But with the Russell 2000 breaking out, who knows, maybe we go further in the short term. So I want to come back to cybersecurity. I talked about this a little bit last week. This group has kind of cooled off a little bit in the last 2 weeks. We had the Palo Alto earnings report, and it was a real bomb in terms of the report was good, but the guidance did not impress. And we had a kind of a wobble. And then Zscaler reported yesterday, and it gapped down today. So it kind of, and again, its basic report was pretty good, but again, the guidance was not what the street wanted to hear. So we had a little bit of a stumble with Zscaler today. So next up is actually CrowdStrike. And I do have a position in CrowdStrike. And it's going to be interesting. Next Tuesday is when they report. And is this going to be the splat of the series, wobble, stumble, splat? Well, we don't know. We looked at the actual index hack. And last week I talked about how, this was looking a little bit toppy, like maybe a head and shoulders was forming. I guess this report by Crowd will be pretty important. Maybe the guidance from Palo Alto and Zscaler is really setting the tone for what the industry is experiencing. Or optimistically, maybe CrowdStrike has a good report, and they actually say they're increasing their market share, which would be at the expense of Zscaler and Palo Alto. We don't know, but let's see what happens. Can crowd keep the sector going? If it's a flop, this might, definitely come back and maybe have to base out for a few months. So it's something to watch in the cybersecurity area. Okay, so let's wrap up. So looking at our monitors, the trend monitor, we're at new highs in the NASDAQ and the S&P, and we've got some optimism that maybe the IWM is really ready to break out. It's closed today as if it does. Everything is, multiple indexes are hitting new highs, which is always good to see. Power trend is still in place. We talked about the net new highs. Much better number of new highs in the NASDAQ than we've seen for the past 6-7 weeks. That's really encouraging because it didn't look so great last week. And the leading stocks, the leaders are leading. We just looked at a whole series of them. They look strong. There's some other ones that are also in the wings that are doing well as in addition to those. Exposure levels, I think, have been increased this week. I think we increased it by 10% or so, 10, 15%, up to maybe 55 to 65%. The push higher here, it's possible that chasing strength might not work. Maybe buying on weakness might be a better approach, particularly in the chip stocks, which have already pushed up higher in the last 2 days. So if you missed that, then you might want to wait for a pullback. So the action is much better. It's really encouraging to see that. Some interesting earnings reports next week. And I believe Chairman Powell speaks on Tuesday to Congress. So that'll be interesting to see what his tone is relative to Fed policy. So the quote of the week is from Larry Bird, the Boston Celtic. I've got a theory that if you give 100% all the time, somehow things will work out in the end. I think this is a good quote because, trading is hard. It's difficult. It has ups and downs. But if you really dedicate yourself, you do your homework, you study hard, you apply good methodology, you cut your losses, it'll work out. But if you lose your discipline, you'll lose it all. So as Larry Bird said, give your 100% all the time. That's all the time for now. That's the general market update for March 1st, 2024. Have a great weekend, everybody. Look forward to talking to you again next week.